Welcome back, and you're watching Markets at Noon on ET. Now, let's talk about Bank of India. They came out with their numbers as well. And when you look at it, today the stock is trading with gains of almost 2.5%. But to talk more about their numbers, what should we be expecting from the bank going forward, we're joined by the MD and CEO of the company, Rajneesh Karnataka, joining in with us this afternoon. Thank you so much, sir, for joining in with us this afternoon on ET Now. It's always a pleasure having you on the show. And let's start by, what has actually been the main contributors for the company in terms of the record profit that you saw of 1,551 crores. What should we attribute this to?
Yes, this quarter for the bank has been very good. In fact, there are two things which have happened. One thing is that for the first time in the history, Bank of India touched the 12 lakh crore of business as on the first quarter of June 23. Another thing was that profit, we have touched a net profit of 1,551 crores, which is 174% year-on-year growth. This has been at the backdrop of the improvement in the net interest income, which the bank has shown, improvement in the net interest margins, which we have shown, reduction in the operating cost, which is there, and because of which the operating profit has improved, and also finally the net profit has improved. So overall, whatever we are doing as a part of the strategy in the bank is to take decisions which are commercially viable decisions and to have focus more on the profitability, net profit and the operating profit, so that the better productive efficiency is shown in the balance sheet overall. So this is the balance sheet for the Q1 for Bank of India.
Right. Mr. Karnataka, your present credit growth is currently hovering at 8%, but you have guided for 11 to 12% kind of credit growth for the full year. Do you see improvement coming in? Do you think that those levels are achievable?
So as per our earlier guidance, we will have a credit growth of 11 to 12% for financial year 24. That remains. We have shown a credit growth of around 9 to 10% this quarter, wherein our RAM credit growth was more than 10%, and our corporate book also grew more than 10%. Only thing is that as a matter of strategy, we have reduced our state government advances. So that has degrown by 15% year on year, and that is part of the strategy. So if you see on the balance sheet side and the book which we contain, so we have a loan book wherein we have a pipeline of nearly 40,000 crores as on date, and we have given fresh sanctions in this calendar year near to around 30,000 crores. So we are very confident that we will be achieving our credit growth number estimated of 11 to 12%.
Okay, and also, do you think you'll be able to grow the corporate book in double digits then?
Yeah, very much. As I told you that our pipeline already is around 40,000 crores we have, and we have given sanctions of nearly 30,000 crores from 1st April onwards. So we don't see any issue as far as the corporate book is concerned.
Right. Mr. Karnataka, you have delivered a net interest margins of over 3% now. Do you believe there is some amount of pressure which could come on your NIMs, or further improvement here from these levels is also not ruled out?
So for our estimate and guidance for March 24, the NIM for us would remain flat at somewhere around 3%. So we closed Q1 at 3.03. We estimate that the NIM should remain stable at 3.03, around 3 only, for the simple reason that we will be improving our interest income also, and also reducing the interest cost. So we feel that the NIM will get protected at around 3%.
And also, what do you think in terms of what is your outlook for the asset quality? Do you believe a further improvement in credit cost is actually possible now?
So as you see, our credit cost has come down, delinquency ratio has improved. As far as the guidance on credit cost is concerned, at a conservative level, we are keeping the credit cost between the range of 60 to 65 basis points for March 24.
How's your current situation looking on the capital side? Are you considering any kind of fundraising going forward?
So as per the board approved mandate, we have a mandate of raising 6,500 crore of total capital this financial year. So out of that 6,500 crore, 4,500 crores will be through equity and AT1 bonds, and the remaining 2,000 crore will be through the Tier 2 bonds. So as far as the Tier 1 equity is concerned, so we will be raising that in an opportune time as and when the market is favoring. Apart from that, as far as the AT1 bonds are concerned, we are contemplating raising AT1 bonds in next 3 to 4 months.